Everybody, welcome to our latest Strive webinar. I'm pleased to be joined by Arjun Murti, who today is a veteran energy sector analyst who's agreed to join us for a conversation that I've really been looking forward to. He publishes in a widely read Substack. He also is the host of a podcast, a wide voice on a wide range of matters, but most importantly for the subject of where we'll get started today, an expert on the U.S. energy sector. And please join me in welcoming Arjun as our latest guest. Arjun, thank you for joining us today. We'll kick this off with a conversation between you and I. I have some questions for you, and I'll encourage you not to hold back. And hopefully we can, kick off our dialogue and lead into an audience question and answer where people will have an opportunity to submit their questions for you too. But that's a little bit of the format for today. And I thought I'd hand it over to you at the beginning to just start as neutrally as we can. You're a veteran observer and analyst of the U.S. energy sector. Where we are today, based on how everything is priced, based on the risks and opportunities you see ahead, what do you see as the best bull case for this sector? What do you see as the strongest bear case for this sector? Where do you personally net out? And, I think we can use this to get into some of the deeper issues that may affect our views on that. But let's start at 10,000 feet first. I'll hand it over to you.
Vivek, first of all, thank you for having me. It's a real pleasure to be here on this webinar. I think for me, the way I've approached this sector, the most important thing to look at is the capital allocation and return on capital cycle for this sector. It tends to be long-term in nature, 10 to 15 years up, 10 to 15 years down. We're coming off a 15-year downturn, 2006 to 2020. Peak return on capital was 2006. The peak oil price wasn't until 2013, 14, keep in mind. So there can be a little bit of a distinction here. But our sector was going down, We had the COVID trough, and you now mix in all this complication of energy transition, and it means a lot of different things to a lot of different people. I know we'll get into it. But what I'd call is normal cyclical downturn, kind of made worse by both legitimate energy transition issues, but then a whole bunch of ideology that I think is convince people we don't need this sector anymore. And that's getting smacked with the reality that while you can wish or want or hope for oil supply or demand to go away, it's actually not. And I think we're actually at the start of what I'm going to call a decade plus-ish type return on capital upcycle. That tends to be the nature of these things. It takes some time to get supply going. It takes some time for CapEx to ramp up. It takes time to find new fields, which we're not even trying to do yet. All at the same time that the world continues to consume a whole bunch of oil and natural gas. And so how long will this last? 5 years, 10 years, 12 years? That is about the duration. These things tend to be 10 to 15 years up, 10 to 15 years down. I think we're in year 1.5, maybe 2 of this new upturn.
So just based on what you said, I think you and I probably share some similar views there. But just for the benefit of, my view is you try and an argument like a set of clothes. If it doesn't fit, you put it back on the rack. But let's just try it on for a second. What would be a reason to be bearish on the future of the U.S. energy sector broadly, and what that means for asset prices and including that of publicly traded issuers? What would be the bear case here? The best bear case as you see it?
Yeah, and I think so. When you look at this sector, why is it a return on capital allocation sector? It's a business that over 30, 50, 100 years averages a return on capital that approximates its cost of capital. Let's just call the cost of capital 8 to 10% to be simple. Over very long periods of time, the sector on average, it can be different for best-in-class or worst-in-class companies, but the sector on average earns its cost as it should. So oil is not like a manufacturing business. If you do not invest in oil and gas fields, it naturally depletes. So in a situation where demand historically has grown 1 or 2%, even if you're bearish, let's just say you think electric vehicles or fuel economy is going to start negatively impacting demand or something else, and demand flattens, you still have the issue of having to spend enough capital to replace the production to maintain it. And we're in a world right now where traditional investors are saying, hey, over the last 15 years, your profitability stunk and your stocks went from 15% of the S&P to 2% of the S&P. I want no part of that. And on a daily basis, oil can be very volatile, and that's a problem. You've got ESG investors, which I know you've spent some time thinking about. You've got climate ideologues saying, we don't want your supply. So you got traditional investors saying, you wasted a bunch of my money. You got the ideologues saying, we hate you. We don't want your supply either. And none of that it's going to help get oil and gas out of the ground to meet the demand that actually exists in the world. So again, you can wish it away if you want, but it actually does exist out there. And so in a world where you don't spend money, supply naturally, because you got to spend at least enough money to maintain the level of supply base. And so that to me is the case for why you have to at least earn a return on capital that approximates your cost of capital. And frankly, to attract capital for at least some period of time, you're going to have to earn an above normal return. And that's the part of the cycle I think we're in. I think we're going to have, is it 3 years, 5 years, 7 years? That's something we can debate. The more there is ideology pushing back against this, but there's more this, frankly, continued skepticism on the part of traditional investors who are not trying to make some grandiose climate call, just traditional investors. As long as they're saying, hey, I don't know about this sector, it's going to keep the return on capital cycle going good. So what would cause that to turn in the other direction, which is your question? Could we envision a scenario where demand falls off the cliff so much so that supply would, even the supply declines wouldn't keep it? It is really hard to see it. Demand and supply are naturally highly inelastic. 80% of the world's primary energy comes from oil, natural gas, coal to do everything. There's nothing, this Zoominar could not happen without energy, of which 80% of that comes from crude oil, natural gas, the clothes we're wearing, the cars we drive, the airplanes we fly. And when you think about the capital stock and what it would take to replace everything, not just the things that people think about, cars or maybe your electricity, but really everything. It's a monumental task, which doesn't mean it can't be done. But the world is focused on, I hate fossil fuel companies, and almost no attention is being placed on the demand side. And so the demand continues, while at the same time, we're telling traditional companies, we don't want you anymore, don't waste money. So it's hard for me to understand the bear case in the absence of something really changing on the demand. Recession can always cause problems in the short term.
Mm-hmm. Yeah, that's, I guess, like a caveat to any cycle for utilization of energy or any other demand for other goods. So I hear you on the demand softening possibility, but I want to go back to a point you made that I thought was pretty interesting. You identified two kind of parallel forces that I actually see as creating a confluence that is maybe underappreciated over the last decade. I mean, force number one was disciplining return-focused investors who said, look, this is a sector that overspent, overlevered, overgrew into low-returning projects on the back of the shale oil revolution, on the back of low interest rates where you could lever up, overinvest in projects. You get the OPEC supply glut leading into the mid-20 teens or in the mid-20 teens. The confluence of all of that led to, I think, a reckoning, just an investor-led, return on capital-focused reckoning for U.S. fossil fuel companies, right, for U.S. oil companies. But I think it was interesting. The way I see it is, right around that same time, you also had the rise of this new ESG-informed, what I view as religion in capital markets, a product of the climate change advocacy movement that wasn't principally concerned about the low returns on capital, but said that, no, not only should this industry produce less for the sake of what those short-term return-hungry investors are saying, but also because this is the way the world is going and should be going, that we should have an end to this industry. And, it's sort of like if you're a whitewater rafter, if two rivers collide, you don't get a rapid that's like twice as powerful. It's more than twice as powerful. And so I just see these two rivers colliding where they had very different impetuses behind them, but the climate change advocacy movement was able to wrap a moral legitimacy, a veneer of permanence and even moral superiority around just the claim of, short-term return-hungry investors who correctly observed that an industry had been pretty bad at earning return on capital for a while, needed to discipline by cutting cost, cutting production, cutting investment, at a time when there was a moral justification and a moral call to doing the same in the name of fighting global climate change. But in reverse, they were able to then say that that was really just about long-run value maximization. And so these two forces converged in a way that neither one alone would have had quite the staying power. The moral argument would have waned by the wayside if there was a return-based argument that dominated the capital market dialogue. But, vice versa, you were able to create staying power for each argument were then the largest and most influential investors in the world, passive investors, BlackRock included, were able to say that, yes, we need to wean away from fossil fuels to fight climate change, but also that if you look at the historical track record, which, on the surface was a persuasive argument, was that these companies were overlevered and overgrowing anyway, that this was also the way to maximize long-run return on investment. And that's what gave this ESG-powered argument against fossil fuels and against the case for investment in fossil fuels such staying power. And I think that's what created this consensus that creates an opportunity to be contrarian. That's at least the way I see it. There was a bit of a long narrative there. What do you think? What's your response to that? Do you agree with that account, or is that just a revisionist account that doesn't track the way you saw it?
There's large elements of what you just said that I'd agree with, in particular the conclusion that this is a huge contrarian opportunity for those that might think a little differently. Where I think I would say, I don't know if I disagree, but would just put different weightings on it. Sure. And then I think the part where I'd put a lower weighting, I think time's going to tell. Let me just get to the point. I place the overwhelming reason for why capital spending has not come back as much as maybe some people would have thought on the poor return on capital over the last 10 years. I mean, from 2011 to 2020, a full 10 years, and you can add or subtract years to get slightly different numbers. The sector earned a 0% return on capital. Now, companies promised, I'm talking about the shale E&Ps in the United States, but these comments hold more globally, that they were going to generate 30, 50, 100% internal rates of returns on their shale wells at $50 oil. We had $51 oil, we got a 0% return. And I think that to me is the overarching reason for why the sector struggled. Then you had this COVID deep trough. You had a recovery in 2021, and we went from losing billions of dollars in 2020 to what's probably going to be a 25% return on capital in 2022. That's an excellent return on capital, but it's only 1 year of it. And to me, you're already seeing the signs with the S&P weighting for energy back to 5% from its 2% low, that traditional investors are just starting to come back to the sector. These companies are paying out much more in terms of dividends and stock buybacks. There is some amount of CapEx growth going on. It's not that it's zero growth. There is some growth going on, but that balance between returning cash to investing in the business, it's the healthiest it's ever been in my 30-year career of looking at this. So I suspect you're going to see traditional investors. It is untenable for whether it's a passive or active manager to be underweight a sector that is now, I've always thought you have to be at least 5%. When you're 2% of the S&P, and a portfolio manager can say, hey, I don't care. It's a volatile sector, even if these stupid stocks do well for a little bit of time. Does anyone care or feel they have to own the steel sector as an example? Sometimes those companies do very well, sometimes they do poorly, but you can skip it. It's an irrelevant portion of the S&P. S&P relevance to me is above 5%, especially as we start getting back to 7, 8, 9% of the S&P. I think you're going to see these sort of moralistic arguments get deeper analysis that they greatly deserve. And I do respect, and I read it over the Christmas holidays, Woke Inc. I do recommend people read your book. I thought it was actually very thoughtful in terms of articulating some of the challenges with what you call a religion, and I would agree with that for both ESG and climate. What I would say, though, is I'd still put the preponderance of, quote, the blame or the weight on traditional investors kind of throwing up on the historic returns. Yep. That is not to say, that's not to say that there aren't investors who are in that moral bucket. I think they're small personally. So,
yeah, no, it's interesting. I mean, I mean, you've been around this sector a lot more than I have. I'm a newcomer to the energy sector. I mean, I grew up in biotech. I spent 7 years as a biotech hedge fund manager. I spent 7 years after that leading a biotech company as CEO. There are some interesting parallels, by the way. One of the parallels is this sort of economics and psychology argument, I think, that you just made, which is a backwards-looking human bias. I mean, academics like Kahneman or Tversky, et cetera, have, I think, won economics Nobel Prizes or equivalents over these observations that we make as automatons. If we were value maximizing automatons, we would look at the future, apply probability weightings to the best forecastable factors, discount back, and then make a value maximizing decision. It's not the way that human beings in markets who comprise the market actors today, at least as of today, it's not mostly AI, it's human beings, make decisions is on the basis of retrospective information and the biases that come from it, and the near-term nature of how you had those retrospective experiences. You're biased towards the experiences you had in the nearest distant past. And, I think you see a lot of parallels between biotech and energy. I mean, you'll see rotation from one category of pharmaceutical projects to another. If the last 7 years had a string of failures in one area, you're going to go to the area that had a string of successes instead. Actually, what you often see is pharma companies then shift money into precisely the area where they had already squeezed the most juice out of it, which means they're actually going to get a lower return on investment in the areas where they'd already squeezed the lowest hanging fruit, when in fact, the 7 years of putting up billions of dollars of CapEx and research into a given area, right when it was about to turn the corner, is sometimes when they turn away. So, that's a biotech industry lesson, but
it sounded like you're talking about the oil industry, quite frankly. So,
right, the parallels are not dissimilar. And so I'm a total newcomer to this industry, but with the lens of biotech and pharma where I come from, I feel like I'm not seeing this movie for the first time. And so I take your point. I just think that maybe the thing I didn't see in pharma was this additional moral case and legitimacy that further vindicates that retrospective bias. So in the sense that not only was that bias, it gives us a forward-looking moral arc bending towards justice. I disagree with the premises of that argument, but it's easy to convince yourself that you're actually being forward-looking when in fact you're just justifying your retrospective, biases. Most people know, right, who are well-trained, that they have these biases. They're supposed to be forward-looking, and yet you still have these retroactive biases. I think it's easier to follow your retroactive biases when you have a justification for believing that you're actually forward-looking, and I think that's part of what the ESG narrative has built into this. So we might have slight differences in the relative emphasis we'd put on each of those contributions, but I think they're interesting observations in either case.
Let me just jump in here, because I think I can actually bridge where we're at on this. So while I will say that the low profitability is the overwhelming reason traditional investors have been skeptical of the sector, where to me ESG and climate has come in, and it's really the climate question, is for my entire career, and frankly for the 100 years of this business, it was population growth leads to economic growth, of which that will be driven by generally fossil fuel energy. So there's a very clear relationship. And the relationship between economic growth and, just to say, oil demand growth, if you have 3% GDP growth, you're going to have 1.5% oil demand growth, to keep it simple. For the first time in my career, the question on oil demand, people are asking the question, is there going to be a delinkage of that traditional relationship due to concerns from policy or from anyone else that they can do something about trying to delink oil demand growth? I am very skeptical that any policies have been put in place to delink oil demand growth. Because what are the policies focused on? They're focused on hating oil companies, which does not solve the demand issue. So I come up with, yes, you're correct that climate and ESG might be holding back investment, but it's through the lens of the expectations on demand. And I'm more optimistic on demand because I don't see the correct policies being put in place yet. Sorry.
No, this is so interesting to me. So just to go further on one particular question there, because there's the economic fundamentals, which you've been talking about. And then there's the separate question of, prices of securities, for example, right? And so on the latter question, how much is that consensus perspective that you described, the potential delinkage of oil prices from demand? Forget the fundamentals argument, but in terms of like the market expectations, and tell me if you understand the precise question I'm asking, how much of that is impounded into the way that, let's say, stocks, for example, broadly are priced? Is that narrative part of the consensus that's impounded in there? And does that create a contrarian opportunity for somebody who takes a different view on whether climate policy will indeed have the substantive impact that it's assumed to have?
I think
much of that consensus is baked in?
I think it's one of the most important factors. So like when a sector has such a poor track record, a recent poor track record, I should be clear on, the 1990 to 2000 period was actually very good. The late 80s was bad. The 70s were good. I mean, that's just the nature of these 10 or 15-year cycle. But the most recent period, which covers a lot of, especially, I'm old, I'm over 50, but for younger people, it encompasses their entire working careers. This was not a good sector. It's hard to disaggregate that from the inherent volatility, from concerns about recession, from concerns about what if some of the geopolitical turmoil dies down. But there is no question, for the first time, these concerns about its oil demand delinking from economic growth to the downside is for sure weighing on stocks. So I think if one does an analysis of demand and what are the factors that drive it, in my view, there's no evidence that fuel economy is improving. It gets a little better every year, but not step change. And I'm skeptical that you can hockey stick EVs within some 10 or 15-year period. I personally drive an EV because I enjoy the ride. I also happen to be someone who is a retired Goldman partner, and I'm very fortunate that I can afford an EV and I can park it in a garage, which not everyone for sure on earth has that type of opportunity. So I'm very skeptical that you can hockey stick EVs outside of the mass affluence. And so I come out with the contrarian view. Oil demand is going to do much better than people think because no one's putting any policies in place to really address it. But it's part of that narrative of, is it because the sector had a poor track record? Is it inherent volatility? Is it recession risk? All those things get baked in. I am convinced that as the sector generates profits, profitability is irresistible to the vast bulk of Wall Street. There'll always be some on the moral ground. There'll always be the climate hawks. And I'm not against decarbonization, actually. I'm in favor of sensible policies, not let's demonize the sector and disincentivize supply when you're doing nothing to disincentivize demand.
Yeah. So that's an interesting view, if that is true, and that's my sense. But as you said, I'm still relatively, to someone like you, a newcomer in this sector. But if what you said is true, and that's my intuition as well, that this is a major factor impounded in the consensus of how securities are priced, then, as the old adage goes, Warren Buffett, I think, is often credited for it, be fearful when others are brave and be brave when others are fearful. There's an opportunity. I mean, my general view on how one makes disproportionate return in markets has been my experience in prior lives is it's not enough to just be right when everyone else is right, nor is it enough to be contrarian and wrong when everyone else is right in a different direction. But you have to be both contrarian and right, and that's a hard thing to do by definition. But if that's really an important and significant part of the consensus that influences how U.S. energy and related securities are priced today, it's kind of unavoidable to get into the merits of the climate change and climate change policy debate if you really do want to potentially have a chance at developing a contrarian view. And then we can debate whether that contrarian view is correct or not. And I guess part of the opportunity that I see, push back on me because I'm in my own, everyone's in their own bubble. I'm probably in my own. But it seems to me that part of what creates the opportunity to delve into that debate as a differentiated investor, and again, I'm going back to my biotech days, you go deep into some mechanism of action. I did this in the hepatitis C world over 15 years ago and made a ton of money doing it. Going deep into one mechanism of action that everybody else wasn't paying attention to, get into the details, get into the granular details, form a contrarian opinion based on having gone into that particular thicket of a debate. I see an opportunity to do that in the climate debate precisely because most people in genteel society, your former Goldman partner colleagues included, are afraid to do that, right? It's sort of become one of these topics that if you engage in with a 360-degree view that does not accept what the knowledge ecosystem has synthesized for you to digest, but rather go to primary sources to form your own view. Tell me if you disagree, but I think that there's a bit of a culture of fear associated with doing that, which, as I see it, is precisely what creates the opportunity to actually potentially derive real economic long-run benefit in your investment view if you did, in an unafraid way, delve into the climate debate, the climate policy debate, in a way that created an informed future perspective on whether climate policy is actually going to take the course that most capital market actors implicitly assume that it will. And if you're reading between the lines of my comment, I basically think it is unlikely to. I don't think that by 2050, we will have adopted the policies that the modern consensus, including the ESG-informed consensus, assumes we will by 2050. Some of that relates to collective action problems. Some of that relates to the fundamentals of the underlying debate being based on flawed premises about even what is and isn't an existential threat to the planet. But my point is, even as I start to say those things, that's going to make people uncomfortable to say out loud in their own investment workplaces. And that's what creates the opportunity for a long-term contrarian. What do you think?
Vivek, so I 20 plus years as kind of a Goldman Sachs equity research analyst. I had a couple things before, but we'll keep it brief. And then for the last 8 years, I've enjoyed with these various behind the scenes advisor, director type roles that I've had, and people can see my details on LinkedIn or elsewhere. But starting in 2021, I actually started publishing again, a Substack that you referenced, Super Spiked, and it's public and it is for free. And what motivated me was just how off base my kind of dismay at how people talk about energy transition. To me, the focus has been 100% in the wrong place. Look at something like the Glasgow Alliance for Net Zero, which is disincentivizing fossil fuel investment banks and insurance companies from financing fossil fuel companies. It's fine if you want to do that. What about all the auto loans? What about all the home loans? What about Amazon? What about the endless delivery trucks that go circle? I love Amazon Prime. You push a button, it's right there. That is emissions. That is, and do people not want that? Or what about the billion people who burn biomass for their energy? What about those people? What about the 3 billion people who use less energy than an American's refrigerator? What about all them? What about non-Goldman partner level Americans who may not be able to? So like, there is a need to solve for all of this. And when the philosophy and the focus is, we're going to force major investment banks to stop investing in fossil fuel, what does that mean? Are the big banks financing Russian oil companies? Are they financing Iranian oil companies? And I'm an American, so I'll apologize for having an American's perspective here. I'd argue they're probably financing US and European companies. So how does it make sense to have an alliance for net zero that is supposedly climate focused, where all you're going to do is disincentivize production from the countries that are actually friendly, that the world depends on? And even if we, for somehow, were able to all drive electric vehicles and have heat pumps and all this stuff, what about the people in rural India? What about the people in Ghana? What about the people in... They should therefore depend on unreliable producers in the rest of the world? So like these policies that are put in place, if you actually had policies that address the fundamental root causes of our demand, as an example, and I'm sorry, I'll try not to go on too long, for the last 30 years, we've had a fuel economy standard that is supposed to improve 3 to 4% a year. The actual improvements are 0.3 to 0.4% a year. We've missed those targets by 90% because we've shifted from cars to SUVs. Heavier cars get exempted or treated differently. And so if you had a policy to address that, then you might be able to actually impact that. We don't do that. What are we doing? We're subsidizing big electric SUVs. We're going to compound the issue by now having more stress on the battery. So my point is simply, all the climate policies that I see today are focused on disincentivizing supply that the world needs, that somehow some group of elites have deemed bad or immoral or what have you, without addressing the root causes, which is the demand side, which, by the way, are not that addressable. You can put some dent in oil demand with much different policies, but the idea that it's going to fall off 70, 80, 90%, which, by the way, would be the type of demand reduction that would be consistent with current CapEx levels, right? That's a point, is that CapEx needs to go up a lot, which is why I think this is a long cycle. We are nowhere close to having those kind of demand policies in place anywhere in the world. So,
I think and this is, maybe cynical, maybe not, but I think what the authentic version of the other side would say, a true committed opponent of your view about what about in India? What about the billion plus people who are using biomass? What about people who burn wood or dung in parts of sub-Saharan Africa? What about them? I think what they hear when someone like you or I makes that argument is that you don't really mean that. That's really just a convenient Trojan horse to advance the pro-fossil fuel agenda. And guess what? We do care about that. The right answer is really making sure that there's enough energy production to let them catch up and to constrain it in the West, which has disproportionately benefited from getting ahead in its advancement, even at the expense of making the planet less inhabitable for everyone else. I don't agree with this view, if it weren't obvious from a lot of my public work and writing, but I do believe in getting the best articulation of that view on the table. And I think that's why there's an S after the G. I mean, even if you listen to, I would say the high priest, Priestess Thunberg on a given day, she will be very transparent about the fact that, as a young woman though she is, that this is not just about the climate. It's about justice. It's about inequality. It's about addressing colonialism. I think I'm quoting her near exactly. And, I mean, she's an angry, teenager or something, other, Gen Z or whatever she is. And I want to take the best possible articulation of what she's saying rather than to hold her accountable for youth. But, if you take the best version of that view, I think what they're saying is the E and the S go together. In fact, the E does not stand in a vacuum alone. This is about S for social justice, that part of this is making sure the West apologizes for its sins of the past. And so you, Arjun, are just taking a view that assumes the West is supposed to live the same lifestyle that it always has. But actually, we should be living in eco homes that have solar panels on our roof and wind, let's just say wind energy or windmills in the back of our backyards. Even if we don't live in regions of the country that have a lot of wind, you take what you get, because you're supposed to adapt because you've wrongfully consumed so much more than you should have. And yes, let those people in Kenya and in India catch up, because they shouldn't be the ones penalized. I think that's what's at the heart of that view. I think the heart of the view you're espousing from an investment perspective is that ain't going to happen in the United States, because if that were the policy we needed to adopt and it was really just about global equity, people aren't going to stand for it. And so then, given that we're going to preserve our modern way of life without giving it up meaningfully, what about the people in India and Africa? But I just thought it was worth, clarifying the contours of that debate, because I hear people on our side, my friend Alex Epstein, others are very good at this, at just sort of spouting off that third world argument. I think many of us mean it authentically, but I think the other side sees us just using that as a talking point, when in fact, I thought it's worth surfacing what they actually think we should do, which is why the E and the S in ESG, environmental and social, go together. It's not about climate policies over here and board diversity quotas over there, which is how, the bastardized version of this in, BlackRock and ISS imposed voting slates go. But the true orthodoxy at the heart of it is these things are inextricably intertwined. And I just thought it'd be worth getting that on the table.
Well, let me address some of what you just said. And so where I would agree with climate hawks, I'll use that phrasing, would be, it's not that there's nothing oil companies should be doing. So I think, as example, I'm on record, oil companies should be addressing their methane. I think that's very addressable. I think the costs are very manageable. Often you generate more revenues than you do costs. And I'd say that is a contribution just about all oil companies should be making. Orphan wells would be the other one. But I would say on the justice argument, because this is actually where I feel most passionately, and I call it one of my motivating factors to creating Super Spiked, it is fundamentally unjust to not deny anyone energy. Where I really push back on is using moral terms to describe energy, that something is green or brown or clean or dirty. Nothing is clean or green or dirty or brown. They all have attributes. They have attributes in terms of availability, in terms of affordability, in terms of reliability, and in terms of geopolitical security. And they have other attributes like the environmental footprint to create it, produce it, and use it, and as well as the inherent carbon content. And I am in favor of moving to lower carbon forms of energy, but they actually have to be available, and they have to be affordable, and they have to be reliable, and they have to be secure. And the issue that the world, I think, has falsely convinced itself of, and it gets to what we started with, is somehow you can do 100% of something that some people, global elites, have deemed green and good and clean. Nothing is inherently green and clean. Those are wrong labels. And there's a real fundamental need to educate people that there's a certain energy content of everything that we produce, and there's a cost to producing it, and to get off these all or none kind of deals.
Yeah.
As an example, you could have hybrid vehicles that would significantly improve you could cut US gasoline demand in half by adjusting how you treat SUVs and allowing for hybrid vehicles. Instead of saying, for example, in the great state of California, we're going to be 100% EVs by some year. There's no chance they're going to be. It's just a political fight. It's not real policies.
So I'm going to needle you a little bit, actually. A lot of what you're saying, I'm sure it's new to a lot of our listeners and interesting, and it's interesting to me too. But a lot of it, and I'm just poking here for fun, I think seems designed to say the thing you're supposed to say to make an argument about, the demand side. I'm in favor of lower carbon approaches if it can meet the demand. But as we were talking about earlier, fixing the demand side, I mean, I'm hearing two strains of commentary from you. One is the friendly thing that you're supposed to say, which is, yeah, try to address the demand side. But then you've also, I think quite honestly reckoned with the fact that that's not going to actually be very doable. And so, I just think that sometimes that becomes the centrist, and even to the extent there's a political debate in the center-right consensus, that's the safe center to center-right consensus to inhabit, when in fact, everyone acknowledges, who understands the underlying issues, yourself included, that the demand side fix here isn't really going to move the needle either. So, we don't favor the supply constraint problem because that's just walking into a disaster. But the demand side fix sounds good, but we all quietly acknowledge that isn't really going to have the effect, which is where I think the more honest of my friends in this debate, Alex Epstein, for example, come out, which is to say that we should stop pretending about this verbiage relating to lower carbon uses, because that's, even if you buy into every tenet of the modern consensus, still not going to move a needle, instead of acknowledging that the single greatest advance in dealing with climate change, as measured by climate-related deaths, was powered by greater and more effective utilization of fossil fuels. The fact that there's 90, this is not my original research, it's his, but actually it's not even his original research. It's an international body of work that tracks deaths related to climate for 100 years, from a century ago to today. There's a 98% reduction in climate disaster-related death rates, and most of that owes to greater utilization of fossil fuels. And so, I'm giving a very coarse, low-resolution summary of his thesis here, but that adaptation, or what he would call climate mastery, is really the right way to protect humanity against the effects of climate change. And climate mastery will require more use of fossil fuels. And in a zero-sum pie of focus as a society where we can allocate our resources, attention, and energy, why aren't we talking more openly about climate mastery than paying homage to this idea of, well, if we could have lower carbon usage, I'm in favor of it, while quietly also acknowledging, as you have several times in this conversation, that that's not really solving the demand side, going to in the foreseeable future address anything other than, making the supply argument more palatable by saying that. And I know I'm needling you here a little bit, so I want to let you respond to that. That's kind of what I hear, is a centrist consensus that sometimes irks me a little bit, because I think it's about actually sounding friendly rather than addressing the underlying problem.
It's very fair. And I do think the words do matter. So again, my example would be, I don't like these clean and green versus brown and dirty type labels, but you're correct to push back. Are you just being sort of polite, or, hey, you did work at Goldman and you can see the affiliations, there's still sort of institutional qualities, or you're using the language of polite society? And I think that's a very fair comment. I mean, I would just say the overarching objective for the world has to be gross zero energy poverty. It is completely unacceptable for 3 billion people and 1 billion people to be significantly disadvantaged. And if that means they're going to use more coal, then they should use more coal, which probably is what's going to happen in India. And we've already seen it in China. And I believe they absolutely deserve to be using American and Canadian oil. And then to the extent that gets used up, oil from Saudi Arabia and United Arab Emirates and gas from Qatar. And I think full stop, we no doubt, no qualifications, that is our first and overwhelming order of business. It always will be the case. No one can live without energy for 5 seconds. And some people have to spend their entire lifetimes and their children's lifetimes living without energy. So there's zero question about that. I don't agree, though, that there's nothing that can be done or should be done. We're going to choose not to. And that's the part where I could probably phrase it more coarsely instead of more politely. We're not on track to address, because it's just a political fight right now. It's the left presides one side and the right presides one thing. I do consider myself to be someone who would like to have as limited of a government as possible, but I'm not an anarchist. I do believe we should have some government and some rules and regulations. And I'll just cite methane as my example of something where perhaps some rules and regulations do make sense. So I don't think we need to necessarily sacrifice our lifestyles to then possibly be more efficient in our usage of energy. Nuclear power, which I know we'll get to, that's an example where, why can't that be part of the solution? Last time I checked, it's pretty zero carbon, it's reliable. It can't be 100%, but it could be more than 15%, and certainly shouldn't be going to zero. But I do think there are lots of things you can do. I completely disagree with all these supply side oriented, we want to morally get rid of fossil fuels. I do not agree with any of that stuff, but I do think there's things you can do on the demand side that we're going to choose not to if we're being pragmatic about it. But I don't mind you teasing me about this. So
no, that's right. I think, and I do want to go to nuclear because I think it's a really important subject, but I smile a little bit in the wake of the discussion or my prodding of you that we just had, which is, I won't name who it is, but there's a, famous, billionaire, multi-billionaire guy I was talking to recently. He's, become a little bit more, outspoken and, on some of these issues and others. Gently, though. Gently.
Let me just jump in on one thing that I forgot to mention, which is there are non-climate environmental issues. So like when I went to college in Denver,
clean air, clean water.
There was a brown cloud that used to come in from Los Angeles. I will say, thank goodness the California Air Resources Board put in whatever they did, which everyone complained about at the time, to get rid of that brown cloud. I think you and I both share an Indian heritage. Right. So let's clean up the air pollution in there. So there's smog control. There are ways to use energy more efficiently and more cleanly that I completely support. Some of that is with new technology. We might become more dependent on Middle Eastern oil. My career started shortly after, it started before, but the heart of my career at Goldman started just after 9/11. So some of my previously not being so excited about oil from the Middle East stems from the Syrian experience of living through that. So there are, I think, reasons to produce and pursue both demand side, but different types of technology. I think that is part of the argument, should be part of the argument here as well.
Yeah, I mean, it's a fine and important point, actually. I mean, I consider myself genuinely an environmentalist because I think clean air is important. Clean water is important. Preservation of our national parks, protected sanctuaries where we're able as human beings to flourish in part through our interaction and union with nature is important. Teddy Roosevelt, I think, had a view of the importance of our national and natural beauty, even as Americans, as part of our identity. And I agree with it. It's a bit awkward that the only way that an environmental argument can gain legitimacy anymore is by disguising it in something that has to do with climate change, because otherwise you are no longer a member of a religion, right? I mean, I think a sense of if you're a member of the Catholic Church, then you can't be a Protestant. In a certain sense, you might actually have some similar goals, but if you're not doing it according to the religious orthodoxy, somehow that becomes impermissible in one strand of modern progressivism, which is interesting to me. I was going to move to that nuclear debate, discussion, whatever you want to call it. And I think I'm going to laugh about us doing this in the context of the story about a friend that I was telling about earlier, super successful guy, investor, gently treading into now 2 years a little later than I did, but now that it feels a little bit safer and the grounds are shifting, is sort of getting out there a little bit and sharing his perspectives. And I love the guy, but he's very gentle and cautious. And anyway, one of the things, he agrees with a lot of my perspectives on fossil fuels, but he says, look, I can't talk about that stuff. But one of the things I found is that actually I'm able to talk a lot about nuclear energy because that's at least a safer area that even if the other side disagrees with me, I think I'm not going to get canceled if I talk about nuclear energy. So that's, I think, one of the things, in fairness, driving the surge of popularity of nuclear energy amongst those who actually probably harbor deeper-seated instincts that are more closely aligned with perspectives like those that I share or Alex Epstein shares on a given day, is that it's at least become a safe space because some on the modern center-left consensus have accepted the need for nuclear to be part of the conversation. So that being said, I don't want to be guilty of doing it because it's just a safe space, but it's an important topic anyway. Let's talk about nuclear energy. It is an interesting paradox that many of the opponents of fossil fuels on grounds of carbon emissions are opposed, sometimes vehemently opposed, to the greater utilization of nuclear energy. Vanguard's ESG fund, at least as of last time when I checked, systematically, one of their ESG funds systematically excludes nuclear energy by rule. And yet, this is the same consensus that informs a proxy voting guideline that leads to a 2021 vote at Chevron to reduce its scope 3 emissions, referring to carbon emissions. That's a bit of a paradox without making the increasingly tired case for what about nuclear, because a lot of us say this. More interestingly, what's going on there with respect to the paradox between hostility to fossil fuels coinciding with hostility to nuclear energy?
I find the the hostility to nuclear is just completely baffling. And I think it stems from the portion of the, like, I'll use the word climate hawk crowd, that are in the Malthusian, the real extreme portion of it. It's filtered to be to the moderate center left, although hopefully that's starting to change. And I can't explain it, where then it doesn't become about trying to provide economic growth. It actually becomes about actually trying to go to degrowth type outcomes, which I would find abhorrent, and is going to leave a whole bunch of people behind. I think, to be positive about this, I do think the temperature is changing in a favorable way on nuclear, that it is starting to gain more acceptance. We've not built this stuff for the most part since the 1970s. That might not have been a time to use as your role model for how to build things. There are countries like China which have consistently added nuclear, and they've been able to do it with an efficiency and on a time frame that is logical. So people who say it's going to take 10 years, it doesn't have to take 10 years. There's a whole bunch of permitting and other regulatory reforms, and there's frankly a learning curve that we should go to. But it's not my line, so I don't want to take credit for it. But it's too bad we didn't discover nuclear energy yesterday, or it would be hailed as our climate savior. And it's nothing should be viewed as a savior. Nuclear cannot be 100% of our mix, because the things do run all the time. And there are times when sometimes power demand is lower. But I think France, to give one European country a little bit of credit, they've got, I want to say it's 75% nuclear mix in their power, in their power generation. They've shown you can do it safely, you can do it effectively, and then not be reliant, in this case, on natural gas or fossil fuel. So I cannot explain to you why it's not getting. We need a Marshall Plan for nuclear power. It has to be part of the mix. So.
And it's fair to say you think not just deregulation, but industrial policy, that is, fancy way of saying government investment alongside private sector investment is effectively table stakes necessary for nuclear, based on your invocation of Marshall Plan logic there. That's about right?
Again, as a limited government, non-anarchist, this might be a place where we could use some industrial policy and some government, if not rules or help, but the government's going to have to be involved in some investment. Exactly.
Is your point. Yeah. Cool. How many questions do we have on deck? Let's see. Several questions. All right. Let's just flash through a few and then we'll talk through them together. I think you did address this earlier, but we can come back to it. What happens to U.S. and global energy if the economy goes into recession? Let's get a sample of a few more questions coming up from the Q&A, and then we'll wrap. With all the issues surrounding energy production, what are the possibilities of nuclear power coming back? How did nuclear energy become so political? So maybe you want to just take those two in order, and I think they're not unrelated to one another.
Well, and you start off asking about the risks to the bull thesis, and the short-term risk is clearly a recession. Energy is not immune. We already talked about recency bias. People remember the COVID, how awful that was. I think it's hard to imagine that we're going to go through that again. Maybe we will, but you tend to overlearn the last lessons. In the same way, the banks were major problems in the 2008 financial crisis. They seem to be better capitalized. I think you have to look back through history. This feels a little bit more like the tech bubble burst. In that environment, NASDAQ's down 80%, energy's down 15%. So it was down 15% on an absolute basis. S&P was down 40%. These are dates I picked. You can use different dates. So energy outperformed, but fell on an absolute basis. You look at the 73, 74 recession, S&P and energy got hit about the same amount before we went into a huge bull market in the second half of the 70s. So if we have recession, that is not good for energy. Historically, I would not expect it to be this time, but I also don't think it's going to be the leading cause that we're coming off some super cycle. We're still much closer to the trough. So I would expect energy to outperform on a relative basis, get hit on an absolute basis.
Cool.
The other question was on kind of US production and nuclear. I mean, I think these are kind of very different things. So the degree to which shale can continue to grow is a question for global oil supply. It was 70% of global oil supply last decade. But that came from a 0% return on capital. So that's not the right math. There's already some signs that for some companies, shale is starting to mature. So we're going to need to expand. My number one place to focus is, what about Canada? Canada's got a massive resource. And for the carbon crowd, we're gonna speak to them right now. Vivek, hope you don't mind. They're doing a CCUS hub that's going to eliminate all their Scope 1 or Scope 2 emissions. So we could debate the merits of that. They're going to do it. They're going to address the concern that some people have, and a legitimate concern. And I do think Canada needs to be, part of their issue is their own government, but we need to start looking for sources of production beyond the US that are allied with the United States. And I think that is something we're not seeing yet. Some of that gets into the ESG ideology that we've already talked about. Some of it gets into the poor historic returns on capital, but we do need to start the cycle of looking for more different things. I think with nuclear, again, I'm going to just be optimistic that we're starting to get people to talk about it. I think that sort of slightly just left of center type crowd is starting to come around on nuclear. So that gives me optimism.
Cool. Well, I'll wrap. I think we're actually running over the 45 minutes we wanted to. Just flew right by. But I'll just say about a funny bit about Canada. I think you put your finger on a pulse that not a lot of people do. You know, Canada, I see it as a country, our friendly neighbors to the north, that is a little too apologetic for actually its own potential and what it can provide. And I just think that we need to, I think the world would be better off and Canada would be better off if it unleashed its actual inner potential rather than shackling itself with this culture of apologism that's imposed on them from, a new global orthodoxy. And I think the question for the United States is, I think the US can actually play a role in leading Canada to that sense of confidence. Right now, I see it going in the other direction temporarily, apologizing for our own capabilities and, as I like to say, apologizing for American excellence. But actually, I think that our being a neighbor and close ally of Canada can hopefully have the opposite effect. And if so, I tend to agree with a lot of what you say about the role that Canada itself can play too. We could go on for hours. Maybe we should, but we'll do it another time in that case. Thanks for joining us, Arjun. And, hope people took something away from this, and we'll see what kind of feedback we get. But if it's good, we'll do something like this again.
Vivek, thank you so much for having me. It's a real pleasure to talk to you today. And I do hope to get a chance to come back and speak with you again. Thank you.
Awesome. Thank you.